But the one thing is the revenue side of the ledger. If we are innovative and we have enough power to generate our AI endeavors over here in America, which, by the way, China's kicking our butt in power. If we get more power here and we're able to power all these data centers and AI and everything else, we can be innovative and efficient and productive and grow our GDP.
Expanding our money supply because the Fed has been restricted. I'm going to explain that.
Credit card loans, car loans, those are short-term borrowing rates, and they are low right now.
Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending. Existing home sales, 4 million home sales annual rate. That's with a little drop.
Hey, it's KP coming to you live from Provo Airport with all the monkeys. Hey, right here, Serafina. We just finished up a family vacation. They're watching Bluey. They tell me I'm too loud. I got these AirPods in. All right, so we had some, by the way, this airport's super cool. It's kind of like Vail Eagle. It's like a mountain airport. You can see it's super chill. They're not even open like half the day. Anyway, all right, so lots happened last week, and pretty much worked every day, but I just could not at the end of the day get a video out. So I apologize for not getting my Thursday night video, but here we are. So PCE, that was probably the biggest data point that came out last week, the personal consumption expenditure. So it was a little higher than expected. It was expected to be 0.1%, but it was 0.2% month over month, which is 2.4% annualized, right? 12 times 2, 2.4%, not a big deal. Now, we have some higher numbers in the last 12 readings. So we're at 2.7 and 2.6, depending on whether you're looking at headline or core. And, but, 3.6 month run rate, it's pretty low. So Chair Powell was out speaking. He was in front of the Senate Banking Committee. Bowman, Waller, a couple other speakers were out as well, all basically saying, hey, July cut would have been in the cards or would have cut already, but they're all worried about inflation from tariffs. So they don't know what it's going to be, but basically Chair Powell. I just read a quote. He just said, everyone thinks there's going to be significant inflation from tariffs. That's what he said. So soon, by the way, and it should show up soon. So that was the interesting part when he said the word soon. So we'll see if it shows up soon. Is there enough time with the June data that comes out at the beginning of July for the July meeting to then have a cut? I don't think so. I think they're probably going to wait and have cover from the dot plot, which won't be until the meeting after that. Remember, every other meeting is a dot plot, so they'll be in September, which is when everyone thinks the next 25 basis point cut will come out. So we all sit and wait. In the meantime, rates have gotten lower because, in some of that data, for example, in the PCE, consumer spending was a little slower. Income didn't rise as much as they thought. So is there some slowing of the economy? We got the final read for Q1 GDP, and it's actually negative 0.5%. So the last reading, I think, was negative 0.3. So the economy slowed just a little bit worse. Remember, that had all the pull through and the goods that were bought and all that kind of stuff that kind of distorted the data. So we'll see if we kind of have like a rebound. I've seen 3.2% for Q2 positive, or 3.5%. We'll see how that all shakes out. But if oil prices came down after the 12-day war, which it seems to be that both Iran and Israel and the U.S., for that matter, have a ceasefire. So hopefully that thing's over, and there's a peace dividend in the world, right? I talk about the peace dividend all the time. You saw oil prices spiked up, and it kind of put a buffer to the flight to quality into bonds, which normally happens when there's some kind of geopolitical risk. But oil was the bigger risk than a flight to safety for some air raid war, on the other side of the planet doesn't really affect, all the major economies. But now oil's back down in the $60 a barrel range, and that's good for us at home. It's been one of the biggest deflationary forces, for the last 6 months plus, is that oil and gas is cheap. And, here we are in the peak summer months of people spending and traveling. And, it's good to have cheap oil and gas right now. So We'll keep an eye on that. 10-year Treasury is under 430. It's like 424, 428. It's kind of bouncing around. I've noticed a pickup in locks. Talked to a couple realtors. I've noticed some of our loan officers have gotten busier with open houses and getting more activity. So it was nice to end the month and quarter and first half of the year with an uptick in locks. So hopefully that will kind of buck the trend of things seasonally slowing down in July and August and beyond. So who knows? We could catch a break with lower rates, especially if the Fed eventually cuts. If people think that there's slowing in the economies, not just here, but around the world. So we'll see if Treasuries catch a bid, and we'll take a look at that. Okay, so FHFA, Bill Pulte, the director, they oversee Fannie and Freddie. He came out last week and said that they are going to allow the use of Bitcoin, or cryptocurrency, as assets. Now, it's really assets for reserves. Basically, you don't have to liquidate it, right? So if you have a Coinbase account or Circle, did you guys see the Circle IPO? The company Circle, they really do the USD stable coin, literally like the biggest IPO ever, literally ever, on cryptocurrency. And I know people get weird about cryptocurrency. Like, you all use credit cards and debit cards. Like, you don't use cash. You just don't. I mean, some of you do, but you really don't. Like, you use way more stuff. It's automated, it's ACH, you get drafted for your mortgage, you get, like our business, you get drafted for all kinds of stuff. It's just digital money. So all cryptocurrency is just a new form of digital money, and it's finally getting some validation from the government. And so, if you had crypto before and you wanted to use it as assets, even for reserves, like the underwriting procedure was to make you liquidate it and then show that it's in dollars. Now, of course, this is just a directive. It hasn't been enacted. It's not in our guidelines yet, but it's looking like it's going to go that route, where you could just say, here's my stock account, here's my Coinbase account, here's my Circle account, here's my cryptocurrency. I've got ETFs that have Bitcoin and Ethereum for as long as they've been allowed, and I know you guys know that I've been in Bitcoin for a long time, so I'm a huge fan of it. It's just digital money, digital art, digital healthcare, digital billing, digital everything, AI everything. It's all coming. It's not stopping. It's never slowing down. So don't fight the trend. Jump on board. So that was a pretty interesting directive, and it will impact our business in a positive way. By the way, on the whole AI everything, there was a FinLocker investor update for those that are tied in with FinLocker. Great borrower experience. I mean, arguably, in my opinion, the best one that's out there as far as up-funnel sales activity. They've been doing it for years. I've been tied to that team since, I would say, probably 2020. Obviously, Brian View, when he left Flagstar to go be the president of FinLocker, he told me about it in June of 2019 that he was going to make that move. And so I've really had a great insight on that company. And in their investor update, they had an investor call this past week, and they were talking about how low code or AI coding has really helped them save money. And it was interesting because coding and AI has really changed the game on productivity. It's called vibe coding. There's this guy like Andrej, who was one of the first guys to kind of come up with the term. He was one of the early coders of Tesla's full self-driving software, then went to OpenAI, and now he has an independent coding shop. But you could basically, if you're a coder, you can go and go, make me a website that will, sell loans, and you just say it or type it in, normal language, and then it codes it. That's how easy it's getting out there. So, talk about worker productivity. It's a big deal, this whole vibe coding, low coding thing, and that's going to be important because just this weekend, the Senate passed their version of the budget reconciliation, which has a $5 trillion debt ceiling as opposed to the House version, which only had a $4 trillion. So more debt for us, more debt deficit. Our kids will be saddled with debt. But the one thing is the revenue side of the ledger. If we are innovative and we have enough power to generate our AI endeavors over here in America, which, by the way, China's kicking our butt in power. If we get more power here and we're able to power all these data centers and AI and everything else, we can be innovative and efficient and productive and grow our GDP, just like we have since COVID. We've gone from like a $19 trillion a year GDP to over $30 trillion a year in gross domestic product. So we can continue to do that. It's really the only choice we have if the House and Senate are going to pass this big ass beautiful bill. So we're going to be saddled with that. Hopefully you stayed till the end to hear me say that. So have a great one. We'll be back at the desk tomorrow, the next couple days. Cheers.
Hey, it's KP coming to you live from Newport Beach. Got my little twinsy here, my 10-year-old Aria. She says, Daddy, I'm hungry. Let's go get a taco and a burrito at Super Panga. So we're going. It is July 4th weekend. It is Thursday, the day before. We've never done July 4th down here. It's a little bit of a ish show. That's slang for the SHIT word. It's pretty legit though. We just had sunset. Okay, let's get into it because we don't have time. It's a long weekend. We're busy. You don't want a long video here, okay? I have no idea what's gonna happen behind me. We're getting mocked behind me. I just got asked, what do you do for a living? Because of my hat. Shout out to Penny Mac for the Stan Curlin Memorial. You guys had Holderness and Bourne gift cards, and I bought this little bucket hat with it. I've never owned a bucket hat. So if we've got some Caddyshack fans, you might be fans. Okay. So the Fed was speaking, specifically Jerome Powell, and he basically said if there weren't tariffs, they would be cutting. He straight up said that. And so the jobs report came out today, and just like last month, the ADP number was weak, so everyone thought the Friday jobs report, even though today's Thursday because the market's closed Friday, everyone thought the jobs report would be weak, and it wasn't. And not only was it not weak today, it was strong. So 147,000 jobs, but pretty cool insight. I saw a chart out there. I think I saw it on Logan Motorshami's Instagram. Over half the jobs are created by government. Now, what's funny about that is that government spending helps our economy when we're in like recession. By the way, this is Mutt Lynch's. Bob Germano, I know this is your favorite place on the planet. It's literally crazy out here. I feel like I'm on like a little bit safer Bourbon Street. Please don't get my car. Thank you. Okay, so over half the jobs are created by government, and government spending obviously is the biggest source of inflation, but when an economy goes into a recession, government spending is typically what helps us get out of it. So the irony of President Trump going back and forth with Powell saying, cut the rates, cut the rates, cut the rates. And then the reason they're not going to cut the rates in July for sure, and maybe not even September, is because of government jobs added in the month of June. So super interesting. Anyway, I still think inflation is slowing. It's pretty obvious. We'll get a CPI report on the 15th, so that's our next inflation read before the next Fed meeting, July 30th. So what I would say is that beyond that, and by the way, Oakmont is the home of the transfusion, invented by FDR, and they also just had the U.S. Open. So 11% of our goods are imported. So how much impact will tariffs have? We don't know, but the Fed is waiting to see. So, and jobs, even though they were strong headline and unemployment rate went down to 4.1%, wage growth was 3.7% for wage growth, wage inflation, down last month from 3.9. So labor's still softening. Participation rate was also down. So it's not all roses on the jobs report. But anyway, okay. So maybe this is what a soft landing looks like. Been saying that a long time. A little bit for everybody. A little weak, a little strong. Soft landing. One big beautiful bill passed today, July 4th. My guess will be some big fanfare and it'll get signed by the president. By the way, these are like Dory Deli and Super Panga are like my two favorite restaurants here. We're at the pier. My daughter is doing TikTok dances while she waits for daddy. It looks like an Irish jig, but it's really a TikTok dance. So, one big beautiful bill. It's a little bit of kabuki theater. So House passed it in reconciliation, $4 trillion debt ceiling. Went over to the Senate. Some things were taken out, this, that, and the other. I mean, I don't really have any super opinions about it, but the debt ceiling did get raised to $5 trillion by the Senate, and then it got kicked back to the House, and then they all voted for it with no changes, like in 2 days. It's like kabuki theater. Like, look that term up if you know what I mean. So basically, Some of it's kind of preordained and predestined. You know, of course, the one vote in the Senate, the split the tie by the vice president. I mean, anyway, so what literally no one ever says online, because of course our debt and deficit is crazy. Of course, and I say it all the time. Remember, we could grow our way out of this thing. Okay, I'm not saying like permanently or forever, and that we shouldn't, not be mindful of this debt and deficit. But if our economy keeps growing, if we keep growing our GDP, I mean, that's the offset. That is the offset of government debt and deficit, right? So, it has happened before. So if they bend the curve, if we get more tax revenue, tariff revenue, grow our GDP, I mean, we're still the home of innovation. We have the best labor force in the world. We have the most nested equity in the world. We have the best standard of living in the world by far. Mississippi is the poorest state, and it's a higher quality of life than all the G7 nations. It's still an amazing place to be. I know people are hurting. I know it's not great. I want rates to be lower so they can get cheaper credit cards, cheaper cars, cheaper whatever. Take it up with the Fed. Anyway, the only other thing that I would say is we have a $450 to $500 trillion global economy, and our labor is about $20 trillion of that output. U.S. labor is $20 trillion of the output. Our GDP is over $30 trillion. So there's a lot of innovation there. Gold, all gold, both under the ground and above the ground, is $20 trillion. Bitcoin and crypto, Bitcoin's about $1 to $2 trillion. So just some things to think about when we think about unlocking innovation, productivity, GDP, wealth, and all that other stuff. So I'm going to go grab my daughter taco and some burritos before the line gets long. Have a wonderful July 4th weekend. Happy 249th birthday. It is tough. If you're a Zen, a hot dog, or a beer, you're in a bad mood. You're on my target zone tomorrow. But today, tacos.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.